are these interest rates going to impact the summer buying season? And why do we call spring and summer buying season anyways? Sure, there's some logic around it, but there's actually data that supports this too. If we start with the logic, better weather brings people out of their homes and out shopping. Sellers think and have been advised by their agents that it's better to list their home when the yard is green and everything's blooming. Spring doesn't just bring flowers, though. It also brings tax refunds to potential buyers to boost their down payment. And if they have kids, they probably want to be settled in their new home before the new school year starts and the busy holiday season comes. Like I said, though, there's actually data that supports this too. More homes are bought and sold during summer months. Homes sold in the late spring and early summer net sellers more money, like thousands more, according to ATOM Data Solutions. And then Bankrate, too, also says that the premium for selling during this time, as compared to maybe October, is actually upwards of 9%. So spring is said to be the peak season for activity in our space. Is this year going to be different? We started 2024 very optimistic about interest rates. The overly optimistic were saying we'd see rates in the 5s by this summer, which is very fast approaching. The more conservative said we'd see a slow, gradual decrease in interest rates, with the bottom not likely happening until 2025. No one was really bold on what the bottom would look like, though. Will rates be in the 4s? Maybe just low 5s. I think most agree that we'll never see the 2s again, but what if old Donnie comes back to the White House? He held rates at 0 for a long time. Some would say that's what got us into this whole mess. Now, I'm personally not trying to make this political or complain. I built generational wealth for my family between March of 2020 and March of 2022. That period that good old Donnie boy pressured the Fed to hold rates down. But it did contribute to this little inflation mess we're in now. And if he wins the election, I'm very curious what guidance he will give the Fed this time. Guidance. Let's pivot here, though, before anyone gets triggered and this conversation gets too heated. We're talking about spring and summer today anyways, and the election's not until October. But we all know the Fed did not cut rates. Yet. The first quarter is wrapped, and we're still hovering with a 30-year fixed rate between 6 and 7%. The first of 3 promised rate cuts has yet to materialize. Nonetheless, markets, investors, buyers, sellers, we're all waiting with bated breath for any sort of hint of when this might be. Powell spoke on Wednesday, followed by more than half a dozen other Fed policymakers on Thursday. So let's dive into what they all said, starting with the big dog. Powell reiterated that the Fed is not a political institution. If he has to say it, though. I won't beat a dead horse. We've talked about those theories. You can catch them on a previous blog. He said the Fed has time and needs to continue to assess the data before reducing interest rates. Basically, they're waiting for more evidence that inflation isn't going to spike back up. Cleveland President Loretta Mester says she thinks the central bank is getting closer to the kind of confidence they would need to initiate the first rate cut. But then Neil Kashkari says he questions whether a rate cut even needs to happen this year. Luckily, he's not a voting member of the Fed this year. Chicago Fed Chief Goolsbee thinks that hot inflation numbers from January and February shouldn't freak anyone out, and we're still on track for inflation to hit that 2% target. The Fed futures market, though, is now betting on what our new neutral interest rate will be. The Fed thinks it's 2.6%. That'll be the magic number that neither slows or stimulates economic growth. The markets, though, they think it's more like 3.6%. This morning, the March jobs report was expected to show 200,000 jobs added. We talked about it on Property Pursuits this week and whether the data in this report is even reliable and worth moving markets. This was a good episode, you guys. We had Mike Wood join us, and we got into a lot of theories and went deeper on a couple major news events right now and speculated on what could be the theory really behind them. What's the motivation behind all these changes in our industry? So if you didn't catch it live, I would highly recommend giving it a listen over the weekend. But back to this morning, the jobs number actually came out showing 300,000 jobs added. So it was 100,000 higher than expectations, and the revision to previous months was actually up, not down. So this leads me to think that Powell's whole higher for longer shtick was not an empty threat when it comes to interest rates. So let's assess a couple different scenarios of what might happen this summer. If rates stay where they are, what we're seeing right now is that a property price to sell We'll have a lot of activity on the first few days and likely end up in a bidding war. In this scenario, I'm working with my pre-approved buyers. We're losing the ability to negotiate on price and definitely for any sort of seller concession, and we're having to put our best foot forward right away. And sometimes that's $150,000 above the list price. That actually happened, and we lost to someone who went higher. Yet, we're seeing other homes, especially in the range above 1.5 million, that are just sitting. It's kind of a vacuum in the market right now, that luxury price point. Truly though, the current buyer market is not in the mood to overpay for a home, so anything overpriced is sitting. If rates stay in this current range, then I think we'll continue with a similar amount of demand. We may see a slight uptick in inventory over the next month or two based on sellers wanting to move their property during this buying season. That could be good news for the buyers who are out there who are actively shopping and staying nimble with their strategy. Let's talk about if rates drop. I'd love for it to happen. I don't know how likely it is, but let's talk about how that could play out. We would move more into a seller's market. Wouldn't lower interest rates be good for the buyer? I just said I would love for rates to come down. But see, this is multi-layered, and that's a great question. Are lower interest rates good for the buyer? A lower interest rate does mean a lower monthly payment, which boosts their buying power. It improves affordability, which is something I like to see. But the problem is it does that for everyone else too. That's the logic behind your competition becoming tougher and your ability to buy a home getting harder if interest rates cool off. If rates drop to the 5 to 6% range, we'll see a lot more buyer activity. That increase in buyers will support homes that come on the market just slightly overpriced, and it will definitely intensify the bidding wars on properties priced to sell. If rates go up, now I will say I do think this scenario is the least likely. We'd have to see some really hot inflation numbers or the Fed do something basically stupid with their balance sheet. If rates go up, this could actually be good news for buyers who still qualify, as they would have an upper hand against sellers who have less buyers out there competing to buy their property. If this happens, if rates go up, then I see our negotiating power improving. I see seller concessions comboed with price reductions again. Of course, it would be shitty for the sellers out there who don't put their home on the market knowing this and continue to feel trapped in a home that no longer fits their needs. And it would be even shittier for the buyers who would yet again get priced out of the market. How do you prepare for any one of these scenarios if they materialize? It is a really excellent time to research creative financing and make sure your buyers are aware of the different options that are available to them. How can you compete with cash buyers? If you're self-employed, what loan programs will boost your buying power? If you're trying to move up into the luxury market, you probably think that jumbo loans have super strict debt-to-income ratios. There's actually loan programs out there that will let you go higher on a jumbo loan. As a first-time homebuyer, which grants are still available, and what unique loan programs will get you a lower monthly payment due to a below-market interest rate and reduced mortgage insurance premiums. We're putting together a free online class so that you can come gather all this information and make sure that you're giving your buyers the best advice and helping them stay nimble in this market. You can bring your buyers to the class, in fact. It's going to be free. It's an online webinar. It's titled How to Win This Summer, and it's happening Thursday, April 18th at 5 p.m. I'll put the link to register below. We hope to see you there, and we hope you bring your buyers too.